What the two largest real estate owners in America have announced the same exact day is no coincidence. Something very big is about to happen to the U.S. housing market and to affordability in this country that every single American needs to pay very, very close attention to. Preti and Partners, they own 97,000 houses. They just announced a new real estate fund. This fund is going to be buying up homes like this, very, very inexpensive homes, beautiful, inexpensive homes, to put them on the housing voucher program, Section 8. They're taking a huge bet on Section 8 right now. Now, why? If the Section 8 program, many people are rumoring that it's going to disappear, it's going to be gone.
Housing Authority has stopped accepting new applications for the Section 8 voucher program, which subsidizes rent for tens of thousands of tenants in the city.
With Elon and Trump, and they're going to change government and assistance and everything that's going to be happening with these benefits to everyday American households, they're going to start to erode and evaporate. Why, if Preti and Partners, the largest homeowner in America, is taking a big bet into Section 8? Because it's not going anywhere. 100 million Americans get financial assistance from the U.S. government. That was 2019 numbers. Imagine what those numbers are now, given the affordability crisis we're in right now. The number's way, way above 100 million. Now, what I believe is happening is I believe when you look at Blackstone, what they're doing, they made an $8 billion bet to take liens on properties with loans that are about to come due. This is North America, Europe, and Australia. They're betting major defaults are incoming. And mainly due to what happened in 2020 and 2021, inside of that crisis that was formed when they dropped interest rates to record levels, people refinanced and borrowed tons of debt. That debt's coming due from now until 2027, and Blackstone's saying, hey, we want a piece of this. When they default, we want to be able to foreclose on them and buy and take over these properties for significant discounts. So you got Preti and Partners really taking a multi-billion-dollar bet on affordability. You have Blackstone betting that we're going to see a wave of defaults. Then you have people right now talking about the stock market crash. You have to look at what's going to happen. Look at these homes. Look at this property. How much would this house cost in your market? 400,000, 600,000, 800,000. Here, where I am right now, this house, probably 120 grand. I have a client that's buying a house 4 houses up here for $57,000. Now imagine you're Blackstone or Preti Partners or some big investor, and you wanted to buy homes for Section 8, or you wanted to buy rental properties. Where would you go? You'd probably go to a landlord-friendly state with low insurance, with high rents, low home prices, in a nice community. That's probably what you would target. Look at this area. Look at this specific area. Cobblestone streets. You have no drinking out front, no abandoned cars, no bars in the windows, nothing like that. Just safe. You hear birds chirping in the background for $57,000. Now, here's what I think is going to likely happen. I think we're going to see inflation continue to get worse. I think the U.S. consumer, their situation is likely going to get worse. Now, as their situation gets worse, the job market starts to kind of fade away from this really unrealistic, for many companies, an unrealistic salary that most employees are requesting. It starts to kind of get pulled. People are going to start defaulting more and more and more. And the investors with cash, liquidity, credit, whatever it may be, they have access to money. They're going to be the ones, the smart ones, are going to be the ones that are going to go out there and buy up these assets for cheap. That's what's going to happen. They're going to buy up these assets for cheap. And what I think is going to be the real winner here is the affordable housing market. Not homes for 5, 6, 7, 800,000. No. Look at a house like this, right? Any of these homes, like they're all nice, well-maintained, well-kept homes. Look at a house like this. Let's just call this house 1,000 square feet. Or maybe we could even look at this house. Say it's 1,000 square feet. If that's 1,000 square feet and it costs $150 a foot to build, which you're not building for $150 a foot, but just to be extremely conservative, that'd be $150,000 just to build it, plus the cost of the land, maybe 20, 30 grand. So it'd be 180 grand in to build that house. When you could buy it for 60, 70, 80 grand, what are institutions going to do? They're going to go out there and buy pre-existing for a third of the cost to replace it. Then they're going to rent it back to you. That's what they're going to do. Rent it all back. Now, Section 8, I think, is going to grow dramatically in the coming couple years. And I think roommate situations are going to continue to grow. But owning entry-level housing in the right communities, I think is going to be the best place to be, no doubt. So like, look at this house. Imagine owning a house like that for 100 grand. It's incredible. This is the house that my client's buying right here for $57,000. It's a 4-bedroom home. Now we're buying homes that need a little bit of work. What we're looking for though is to be in the right community and do the work right. And we're putting roofs on in many cases. We'll put a big picture window here. We're gonna paint the exterior, renovate the interior, probably rent it for $1,400 to $1,500 a month. You know, done deal. $1,400, $1,500 a month, and should get all the money back. And you know, if the tenant stays the entire time, the average Section 8 tenants stay in 5.8 years. So if the tenant stays for 5 years, essentially pays off the house through that government program, through Section 8. Now imagine you're Preti and Partners and you're buying 2,500 homes in a similar type of environment, guaranteed rent from the federal government. In 5 years, the government will pay off 2,500 houses for you. Imagine what your investors would say. They would say, I want to invest everything with you. That's what they would say if they could return all the funds on 2,500 houses, everyone gets paid out in 5 years, and they still get the distributions, right? This is what these Wall Street firms, I think, are going to be leaning into more and more and more. They're going to be partnering up with the U.S. government and buying properties like this and renting them out. I mean, look at that. Myself, I own 6 houses here. I own a house 2 blocks over. We have another investor buying a house 1 block over, or 2 blocks over actually. And I own 6 houses, no mortgage, since I moved here in November, and in a office building. We have 13 houses that are closing by next Friday, so that'll take us to 19, and plus the office building, 20. And we're going to scale up. Our goal is to scale up to 300 houses by the end of the year, $500K a month in gross rents collected. And I think this shift unfolding is just the beginning. Now, I made this call in November when I moved out here, that everything is going to be pointing towards affordability, everything in the future. And Bank of America came out literally 5 days after I moved out here on the 6th of November, and they said that Indianapolis, Columbus, Cincinnati, and Cleveland are where people are moving and where deposits are flowing. And I thought that was really interesting. And they said that because of the affordability crisis, this is where people are going. And that's what I thought was going to happen. I thought that was going to happen because companies can hire, inexpensive labor here. Like, for example, you could find someone talented, someone in the trades for $120, $130 a day to work. In most cities, you're spending $250 to $350 a day, and that person acts like they are doing you the favor to show up for $250 to $350 a day. Here, because of the low cost of living, people can work for a much lower cost, making it much more cost effective to turn these properties over. So my bet was the affordability crisis is going to get worse, and there's a narrow window to acquire really, really great deals like these, and soon that window is going to close. Large corporations are going to come out here. They're going to try to hire talent. They're going to buy real estate. Everything is just going to start to push into these markets. The Des Moines, Iowas, these types of areas are going to be the beneficiary. And areas with very high home prices are going to struggle to attract more people. Like the LAs, the San Franciscos, the New York Cities, these areas, I think they've had their best days behind them because of it's not very business friendly and it is very expensive to live. Everything is very expensive. Here, you have low insurance, you have low taxes, low cost of living, low housing prices. You could live on 40 grand a year. Where else can you do that in America? And so if you were Preti and Partners, you are a big real estate fund, what would you do? You would move where you have a high probability of getting a significant return on your capital with the least amount of risk. Would you go buy $500,000, $600,000 houses to rent out to the general public at $4 grand a month? Probably not. You buy a house like this for 100 grand and rent out for $1,400, $1,500 a month? You're damn right you would, right? And this is exactly what these institutions are thinking. Buy the inexpensive homes, rent them out to the general public. As everything else craters, people will have nowhere else to go. They'll have to come here, right? They'll have to go to these affordable properties. And they'll continue to increase rents. I think the roommate situation is going to continue to grow. And And you want to own assets. You want to own the right assets, and you want to hold them for the long term. Because inflation is going to get worse. The cost to build these homes will only get more expensive in the coming years. And I think the rents here are only going to be stabilized or increase over 2025 to 2030. Look at this neighborhood. Look how quiet and peaceful it is. Really, like, there's not a bar on any of these windows. There's not an abandoned house anywhere. There's no boarded up homes, no abandoned cars. Like, this is where it's at. There's still markets in America where you can do this. You can go out there and invest just like Wall Street on a smaller scale. Maybe you buy 1 home, 5 homes, 10 homes, whatever it may be. But there's still opportunity out there. A lot of people think that, it's impossible for me to be able to do this. Maybe where you live, but there are opportunities in America that are ripe for the taking. What do you think about this? If you have 100K or more, and you'd like to learn about what we are doing, hop on a call with me. And we're buying these properties 30 to 40% below market value, like significant discounts. Like this house for 57K, anything in this neighborhood that's trading is like 130 to 150. We're gonna put 20, 25K into it, so we'll be all in like 80, 85K. But we're getting all these deals through my network, wholesalers, a lot of people reaching out to me through social media. We're getting these deals at major discounts. We're not going on Zillow shopping around, paying market value like everybody else. We're literally getting these properties at huge discounts. When this picture window is installed and this is painted outside, this place is gonna be the nicest house on the street. The nicest house on the street. Look at that. Look at that. This is what we're doing. We're capitalizing on this trend. Let's have a conversation below. And if you'd like to learn about what we're doing, you have 100K or more that you're thinking about investing, you can book a call at singlefamilyinvestors.com if you're interested in learning how to invest in houses just like this. And we handle everything from finding the deal, overseeing construction, property management, literally everything. So if you want to own a house like this and cash flow in the Section 8 program like Pretium Partners on a smaller scale, book a call. Catch you next video.